Welcome to Everything You Need to Know About Finance.
Great to be here.
Today, we're diving deep into Microsoft, ticker symbol MSFT, of course.
Yep.
We've got our hands on their latest financial results. That's for the second quarter of their fiscal year 2025, which actually ended back on December 31st, 2024.
And we've got some recent stock market data, too, to see how it's been trading lately.
Exactly. Now, before we jump in, the usual important point.
Absolutely. It's really crucial for you to remember, as we explore all this information, we're simply presenting data we've gathered from these sources. This is purely for informational purposes. Nothing we discuss today should be taken as financial advice. Seriously.
Definitely not. Any decisions about your investments, well, you should always make those in consultation with a qualified financial advisor.
Okay.
Disclaimer done. So we've got this earnings report, stock info, quite a bit to unpack.
Yeah, there's a lot here.
Our mission really is to pull out the key insights for you. So let's get started. Based on this latest financial report, what's the big picture? Where does Microsoft stand right now?
Well, the big picture looks pretty solid. Continued strong performance, I'd say.
Okay.
So looking at that second quarter, FY25, Microsoft pulled in $69.6 billion in revenue.
Wow, $69.6 billion. And how does that compare?
That's a healthy 12% increase compared to the same quarter the year before.
Yeah.
So good growth there.
And it wasn't just revenue, was it? I saw operating income jumped quite a bit, too.
It certainly did. Their operating income hit $31.7 billion,
Okay.
which is up 17% year over year, or 16% if you look at it in constant currency, taking out the exchange rate effects.
Right. So strong operational performance filtering down.
Exactly. That flowed right down to the bottom line. Net income grew to $24.1 billion. That's a 10% increase.
And earnings per share?
Also up 10%. Diluted earnings per share came in at $3.23.
Yeah.
So consistent growth across the board, really.
Okay, here's something that really caught my eye, and I think this is where it gets really interesting.
Mm-hmm.
Satya Nadella, the CEO, he pointed out their AI business. Apparently, it's now got an annual revenue run rate over $13 billion.
Yes.
Yeah.
That number is quite something.
Over $13 billion run rate. And the growth,
That's the kicker. It's up 175% compared to the previous year.
175%. What does that tell us? I mean, what's the significance of a number like that?
Well, first, that annual revenue run rate, it's basically taking their current AI income rate and projecting it out for a full year,
Right.
hitting $13 billion. And especially with that 175% growth, it just screams high demand for their AI stuff.
Yeah.
And it also shows they're getting really good really fast at making money from these new technologies.
And the CFO, Amy Hood, she mentioned something about balancing spending.
Right.
Right.
She talked about, keeping operational discipline, being smart with spending, but also making those crucial investments.
In cloud and AI infrastructure, presumably.
Exactly. Yeah. Which suggests they have a clear strategy to keep this AI momentum going. It's not just a flash in the pan.
Okay, so strong overall results, AI clearly a massive driver. Let's dig into the different parts of the business. How did the segments perform?
Sure. So breaking it down, productivity and business processes, think Office 365, LinkedIn, Dynamics.
Got it. The core software stuff.
Right. That segment brought in $29.4 billion in revenue. That's up 14%.
Still very healthy growth. What drove that?
Mostly Microsoft 365 commercial products and their cloud services revenue there grew 15%.
Okay.
LinkedIn revenue was also up by 9%. And Dynamics products and cloud services grew 15% overall.
And Dynamics 365 specifically.
That did even better, actually, up 19%. So yeah, their main business software and the related cloud services are still expanding nicely. Strong adoption.
So the traditional powerhouse is still performing well. What about the cloud business itself, the intelligent cloud segment?
Yes. Intelligent cloud, that was definitely a standout.
How much revenue?
$25.5 billion. And the growth rate was even higher here, a 19% increase year over year.
19%. Impressive. And what's under the hood there?
Well, server products and cloud services revenue together increased by 21%.
Okay.
But the real engine, as you'd expect, was Azure and their other cloud services. Growth there was 31%.
31%? That's huge.
It really is. It shows the continued strength and, expansion of Azure. It's not just new customers, it's existing ones adopting more advanced services too.
Makes sense. Okay, and the third segment, more personal computing. That's Windows, Xbox, Surface.
That's the one. Revenue there was $14.7 billion. It was relatively unchanged, pretty flat year over year.
Flat overall, but were there any interesting bits within that?
Yeah, actually, if you dig a bit deeper, Windows OEM and devices revenue That actually went up 4%.
Okay, a bit of growth there.
And Xbox content and services saw a modest 2% rise. But a real bright spot was search and news advertising revenue. If
Yeah.
you exclude the traffic acquisition costs, the money they spend to get people to Bing in their news sites.
Yeah, the core ad revenue.
Exactly. That showed really strong growth, up 21%.
21%. So even in the more stable segment, there are pockets of significant growth. Interesting.
Definitely.
Now, beyond the P&L, how did Microsoft reward its shareholders directly during this quarter?
Well, they returned quite a bit of capital. In the second quarter of FY25, Microsoft gave back $9.7 billion to shareholders.
$9.7 billion. How did they do that?
Through a combination of paying dividends and also buying back their own shares.
Standard practice for a mature company like them.
Right. It's often seen as a sign of financial health, and that management feels confident about the future.
Okay, let's pivot a bit and talk about the stock itself. MSFT on NASDAQ.
Yep.
We have a snapshot from May 20th, 2025. The stock price closed at $457.24.
Okay.
And the range that day was pretty tight, actually. $454.32 up to $457.56. But looking back a bit further, over the last 52 weeks, the range has been much wider. A low of $344.79 and a high of $468.35.
Right. So that closing price on May 20th was definitely near the top end of that 52-week range.
It was. What might that suggest about how the market's feeling about Microsoft?
Well, generally, trading near your 52-week high usually signals positive market sentiment, doesn't it?
True.
The big run-up from that low of around $345 over the past year, that likely reflects these strong financials we've been talking about.
Especially the cloud and AI excitement, I imagine.
Absolutely. That seems to be the main narrative. The tight range on that specific day, May 20th, might just suggest things had stabilized a bit, maybe after the market digested the latest earnings news.
And the overall size, market cap.
Huge. A market capitalization of $3.40 trillion US dollars.
Yeah.
I mean, it just underscores their massive scale and influence in the tech world.
No kidding. So the earnings report hammered home the strength in cloud and AI. And looking around at recent news, it feels like that's the story everyone's picking up on. We're seeing headlines about Microsoft going all in on AI agents.
Yeah, I saw those.
And the impact generative AI is having on business software. One analyst even said Microsoft's AI push is just entering the middle innings.
Middle innings, I like that. Suggests there's still a lot more game to play, right? Significant growth still ahead, potentially.
That seems to be the implication.
And it fits with other things we saw. Like, there were reports before this Q2 release pointing towards increased profit.
Right, setting the stage.
And then, after these strong Q2 numbers came out, some analysts were suggesting the stock could jump even higher, maybe nearly 20%.
And we even have a slightly more recent data point, right? The Q3 earnings.
We do. They reported their fiscal Q3 2025 results on April 30th, 2025. So after the period we initially focused on.
And how did those look? Confirm the trend.
Very much so. Revenue hit $70.07 billion. That's up over 13% year over year. And net income reached $25.82 billion, up nearly 18% year over year.
So the momentum clearly continued into the next quarter.
Absolutely. It reinforces that the growth we saw in Q2 wasn't an anomaly. It seems to be part of an ongoing positive trend.
Okay, so pulling this all together, what does this all mean for you listening in?
Well,
It seems pretty clear, doesn't it? Microsoft's recent financial success is heavily leaning on its cloud services, Azure mainly, and these really big, aggressive bets on artificial intelligence.
that's definitely the core story. The numbers back it up.
And the stock price performance over the last year seems to reflect that positive momentum, that market excitement.
I think that's a fair assessment. And looking ahead, thinking about the future of the stock, the general vibe from analysts does seem pretty optimistic.
Based on
the continued growth runway they see in cloud computing, and especially the ongoing innovation and, crucially, the adoption of their AI tech. Those are the key drivers everyone's pointing to.
But there's always a but, isn't there?
There is, and it's important for you to remember this. Microsoft always includes those forward-looking statements in their releases for a reason.
Right, the cautionary notes.
Exactly. They outline various risks, uncertainties, things that could impact future results. Competitive pressures, managing a huge global business, the complexities of AI development and regulation. It's not all guaranteed smooth sailing.
A necessary reality check.
Definitely.
So this deep dive hopefully has given you a good snapshot of where Microsoft stands financially right now and its position in the market.
Yeah, a snapshot based on these results and recent data.
If you want to go even deeper, well, you could always look at their full earnings reports, listen to the analyst calls.
Hmm.
There's more detail out there.
For sure.
And maybe this leaves you with a bigger question to ponder, something for you to think about.
Mm-hmm.
Considering these incredibly powerful trends, cloud computing, AI, how might they continue to reshape not just Microsoft, but, well, the entire world of technology and investing in the years ahead?
That's a great question. Definitely some food for thought there. The impact could be pretty profound.